G'day everyone, welcome back to Pete's Investing. It's July 14, 2023. This is the NASDAQ price update. We've got a weekly in a bullish mode, a daily in a bullish, and also our hourly has broken out and invalidated our divergence, and I'll talk about that in a minute. First off, on the weekly, you can see there we're making a lot more new highs with our weekly, and this is our oscillator here. It's broken above the zero line and still heading nicely to the north, so it's giving us a very bullish signal. Notice also the price has, on this wider Fibonacci range, the price has actually bounced off that 61%, and as I always say, that's always a key level to look out for. Of course, the price can bounce from any level, but that's always a key area to look out for. If it's going to bounce from there, we're going to see a reversal. Otherwise, if it breaks through there, we're going to most likely see further declines. So just always be aware of the 61% level on Fibonacci's. Also, we had here on the weekly, we had a bearish divergence longer term over these months versus a bullish on the price. Now, during this period, you always look out for a potential reversal. So if you're going long during that period and you're following that, always be aware that the price can significantly reduce, and it has come back and forth in those few waves. But notice it reached a peak and the CCI continued to the downside, and then eventually fell off and corrected quite substantially compared to those little waves in there. So at the moment, primarily bullish trades on the weekly. On the daily, likewise, it's broken up into a bullish momentum as well. It's broken through this key resistance at 15,285. Now what I'm going to do is I'm going to move that resistance to that level there. That's now matured as a new resistance level. Before I move on from the daily, just notice we did have that was not a divergence, that was a bullish divergence, so that's not valid. Now, I don't know why that was drawn, so I'll remove that. Now we had a bearish divergence there drawn last time, and it stopped at that previous week, and that was going bullish, so that was going bearish. So we're going to adjust that and just bring that up to the new peak. That's still valid because that level is still below that key area there, and so we need to see that the CCI break above that area to invalidate this divergence, and this divergence needs to be redrawn to that and on top of that candle on that resistance. So a couple of things to look out for. This, remember what I said about the weekly following that divergence. This could be something that's playing out now with the daily as well, so just be aware of that in a smaller time frame. We may see, and plus this resistance area is also showing a potential reversal. So I'll keep an eye out on the daily. So cautiously going long primarily for breaks through this resistance. On the hourly, again, you can see here we had this couple of divergence here. We had a bullish divergence here. Let me just, between that point and that point versus that bearish divergence, and that worked out. It hit our target. That was before our last video. That's where that dotted line is. Now since then we did draw also we did draw that up to that point there, and that was a bearish divergence up to that point. But notice now the new CCI level has broken above that area. So what's the rule? The rule is, so long as the CCI stays below that area, it's still a bearish, and the price is making new highs, it's still a bearish divergence. And as soon as that breaks, in other words, that trend line starts moving upwards, it invalidates, in line with the price, it invalidates the divergence. So we're going to remove that, and we're going to remove that. So there's no divergence at the moment on that. Now, just making sure there is no divergence. You could argue there was a bearish divergence there versus a bullish divergence there. You probably should still count those wicks as the full candle, and I would probably suggest that would have been a little divergence as well, but I won't draw that in. Anyway, just be aware of that on the hourly. We've hit this key resistance at 15,600, and that's you can see there the oscillator is also turned to the downside, bearish. Notice also the CCI is turning down as well, so that's probably a divergence in itself. Yes, I like divergence, as you can tell. I just like saying the word. So I won't draw it, but you can see there that's pretty much a double top. So we may see a bounce down from there, and for that to operate or to work, we'll probably need to draw a Fibonacci. Let's go down to this level here, significant low, up to that level. And so long as, let's assuming we draw a channel, if it breaks below that channel, we're going to set a target around, at the earliest, that 23% level. So if it breaks below that channel in the next few hours, that'll be our initial target area. So I'll keep that in there with that bearish divergence versus a double top on the price. You can see there the bear candle is just struggling to break free in a more bearish movement. Anyway, so it's a couple of strategies to look out for. The divergence, and they're independent on all the time frames. They're not related necessarily. But the other strategy is looking at the weekly and the daily trend and trading the hourly based on those trends if they align. So at the moment, yes, the weekly and daily are aligned long, but just be careful. We've hit this key resistance, and we're hitting this. We've got this divergence that's playing out on the daily, but also a smaller one on the hourly as well. So to understand how to trade this and other trading strategies, subscribe to my Patreon page and feel free to make a donation there if you like the material. We also do weekly scans of stocks, currencies and commodities on that Patreon page. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.